Now we're going to talk a little bit more about some of the resources that are available, both from a preparation, being ready to respond, and also the risk transfer side. And Michael Schmidt is here from R.K. Harrison in London. R.K. Harrison is the largest independent Lloyd's broker in the world, and they're one of the largest providers in relationship with the Beazley Group, who provides services and insurance. And Michael and I do a lot of the client side. So what we do is we bundle up your concerns. We talk with you. We find out what your needs are, and then we're the ones that kind of get your thoughts together. And we then talk to the Beazley folks, and it may be Alex on a particular. They're concerned about this issue. You know, where do you think they should be guided? Or it may be with Max saying, you know, this is not a cookie cutter thing. Max will actually underwrite your exposures, but Michael and I do a lot of that. Michael has a lot of experience in the products that have developed from a risk transfer standpoint, and what we've asked him to do is kind of give us an overview of the history of the development of those products, what's kind of out there, so that you have an idea of when you're going to make your decisions of how we're going to go. You'll have some information on it.
As Gary mentioned, I am a broker with R.K. Harrison in London. We are a private employee-owned Lloyd's of London broker. So basically what that means is we work with brokers within the U.S. like Gary to provide access to underwriters at Lloyd's like Max, and then also on top of that help provide analysis and expertise within the certain coverage areas that you're involved in. My area of expertise is cyber liability and technology, errors and emissions world. And what I would like to do just in the next few minutes is just kind of give you an overview of what the insurance world is like for addressing the risks and exposures that Alex had gone over earlier today. So real quick, the history. The coverage itself is probably about 14 years old. Right around 2000, some of the earlier forms that came out, they were really targeted towards true tech and e-commerce groups. It was really a first-party coverage. It was intended to cover business interruption and maybe some sort of hacker invasion and damage being done to any sort of IT infrastructure. The product really didn't take off as well as they had hoped. It actually took, through the development of some of the legal and the regulatory environment, some of the items that Alex had gone over earlier, that really kind of transformed the product into what we know today. So when you look at the product now, it still contains some of that first-party coverage areas, but it really is about data protection and privacy liability. So what is available out there? Well, from the number of carriers, any report you look up, the number is probably anything from 50 to 60 carriers providing some level of cyber liability coverage. The available capacity, again, I think you'll see maybe $250, $300 million in overall limits available by stacking up all of those carriers. I've actually seen some reports where people have said that it's possible to build up to $500 million of coverage on one risk. I've not actually seen that done, but it just shows you the interest level and the investment from the insurance carrier side into the product. And then lastly, the source of coverage. You're going to have frontline true insurance carriers and underwriters like Max and Beazley. You have MGAs, small groups writing it, and then you have reinsurance structure that's available out there as well. These are all the areas where you're finding the coverage being provided. So through its development, the product itself, I'm going to start with kind of the base coverage, but I just want you to know that where the coverage stands today, it really is a flexible product. It's something that's always evolving and moving and changing, and sometimes it's moving forward, sometimes it's moving sideways, sometimes it's adjusting to the needs and the risks of your specific clients. But what we're looking at up here is really kind of the base. This is the true starting point when you talk about cyber liability coverage. And it really has three buckets. The first is the breach response component. And the idea here is that you would be reimbursed for the expenses you incur in dealing with some of these items. Now, as Alex had gone through before, you may not ever get to the notification. You may not set up a call center. But if there is a breach or if there is some sort of cyber event, you most certainly will be dealing with legal costs and most likely IT forensics expenses. And those, depending on how complex and how deep the breach is, those kind of issues can run for months and almost years. The second component, the first party, as I mentioned, this is an area that goes back to the origination of the coverage. Some of the coverage components, any sort of the recreation or recollection of electronic information that has been lost or damaged. Business interruption, if your clients suffer an electronic or a cyber incident which causes their system to go dark for a period of time, depending on the underwriter, anywhere from 8 to 12 hours. What it's intended to do is then reimburse the company for any lost income moving forward after that point. Cyber extortion, if you are given a threat by a third party, essentially what they're saying is that they have access to your system, they have access to material, they're either going to shut down your system, expose information that you're responsible for unless some sort of ransom is paid. The coverage is intended to pay for the investigation of that threat and then also the ransom if it comes to that point. And then finally, reputational harm. Should you need to put out, and I'm not talking about the public relations campaign that Alex mentioned earlier where you're actually trying to keep the information in. It's a reputational situation. So the data breach is out there, it's in the news. With the reputational harm, what you're looking to do is put together a campaign that actually works in the favor of your client so they can retain their good name within the community. And then the third part is the most recently developed areas is the liability component. So you're talking about data breach where the individuals suffer a violation of their privacy and they bring suit, or you've got the regulators coming in because of a data breach or privacy violation. The coverage there is intended to pick up the defense costs and any sort of damages that emanate from that situation. So we've got the base coverage, and there's essentially two ways within the marketplace that insurance carriers handle the presentation and providing the coverage. The first is your typical indemnity insurance policy. So what they'll say is, we'll give you a policy and it will provide coverage for those three buckets that we discussed. If and when a breach occurs, it's up to the client to go out and set up the vendors, the call centers, hire the legal experts, the forensics firms. And at the end of the day, at the end of the investigation, the insurance company will reimburse your client for the expenses they've incurred. The other model is one that has been created by Beazley. Was it 2008? 2009, thank you. And it's really a model that to this day, it really doesn't have a match. It was evolutionary. What Beazley decided to do was give you everything that you get from the indemnity model and say, sure, you're going to get the great insurance and all the coverage that you need. But they realized that managing the breach up front and having the proper people in the room from moment go is going to minimize the damages to your clients. And so what Beazley has done is they've set up an entire group. Typically within an insurance company, you've got underwriting and claims. What Beazley has is underwriting, claims, and then they've got a whole room of Alex. So what they do is they're not worried about what's covered, what's uncovered. They're going to look at the breach and say, we're going to make this right. We're going to handle this the best way we can. And so that's really what sets them apart from the other insurance carriers. On top of that, from a day-to-day standpoint, you've got underwriters like Max who are innovative, who think outside the box, who work with you. And again, because within the whole world of cyber liability, it's about addressing the specific risks and needs of your clients. And so you can't have a one-size-fits-all approach. And so working with Max, we sit there and it starts with our overall analysis and our risk analysis of your clients, trying to figure out what they need and trying to find a way to transfer that risk to insurance carriers like Beazley.